everyone, there's a small cap company called PCBL with a market cap of around 12,000 crore that I've been tracking for a few months now, and I recently came across an interview where its chairman said that PCBL profit may jump 5 times in the next 5 years. Now that is a very bold statement. Interestingly, this company is currently available at a reasonable PE of around 25. So if PCBL can deliver such exponential growth in the next 5 years, it can be a huge wealth creator. By the way, this company is part of a very prestigious business group of India, RP Sanjeev Goenka. They have a very strong reputation and history of wealth creation for the investor. So if Mr. Sanjeev Goenka, group chairman, says that their profit can jump 5 times in 5 years, there must be something special about the company. The question is, what is so special about PCBL that it can grow its profit at 5 times in the next 5 years? So in this video, we'll deep dive into PCBL business model, future potential and company's growth plan, leadership detail and key risk in the growth thesis. But before we proceed, a disclaimer that this video is only for educational purpose, it's not a buy or sell call. My intention is to share the knowledge so that you can further do your study to build conviction before investing. Alright, let's get started. Established in 1960, PCBL is basically in the business of carbon black for more than 60 years now. In fact, it's the 7th largest producer of carbon black in the world and India's largest company. This carbon black is produced from petroleum-based feedstock. Now the question is, what is the application of this carbon black? So PCBL has 3 business segments: tires, performance black and specialty black. It started the journey with carbon black that found usage in tires. In fact, 20% of tire weight is from carbon black. But that is essentially a commodity business. And that's where PCBL has slowly shifted to 2 new business segments: performance black with non-tire business and specialty black, which is non-tire and non-rubber. This slide gives a good picture of product application. First is tire business, and then performance black find usage in conveyor belt, industrial hoses, and the specialty black segment find application in food plate, electric wire, printing, camera body, automobile components. Now going back to the management guidance of 5 times profit in 5 years. How is that even possible? So that is possible with top line expansion and second margin expansion. Once the top line grows and margin expand, your profitability grows at much faster rate. And that's where in this video, we'll figure out how company intend to grow its top line as well as margins. So in the top line growth, management is expecting high demand for their business. I was going through their con call and they mentioned that Indian tire sector is witnessing a strong growth opportunity and the industry appears to be well positioned to drive a long-term growth opportunity. Indian tire sector is a big beneficiary of supply chain de-risking strategy by global OEM following the continued supply chain disruption over the last 3-4 years. Adding to this, favorable government policies that advocate Make in India. We expect tire industry to grow by high single digit to low double digit for next few years. So the reason for top line growth is strong growth for the tire sector. Especially there is strong demand for export. And the reason is North America and Europe have seen very slow expansion in carbon black capacities. And there is high shortage of carbon black after Russia-Ukraine war. On top of that, China is facing issue of increase in raw material cost of carbon black. That's where PCBL is very well placed to benefit from this export demand. And in order to take advantage of this demand, company is expanding its business big time, which is going to increase its top line. Not only that, company is now focusing more on specialty black chemical, which is a high margin business. Historically, company had a major business coming from carbon black used in tire segment, but since this is a commodity segment, PCBL did not command a very high margin. But now they are focusing on R&D and increasing capex with special focus on specialty black segment. This slide gives a clear picture of PCBL business mix over the years. In 2015, tire contribution was 75%, performance was 24% and specialty just 1%. Fast forward FY23, tire contribution has reduced to 65%, performance is now 25%, and specialty black, which is high margin business, contribution is 10%. And that has resulted in an increase in carbon black EBITDA margin from rupees 5 per kg all the way to 16 rupee per kg and expected to grow to 18 rupee per kg. This slide gives a good overview of company's business. It has 5 manufacturing facilities, 2 in Gujarat, 1 in West Bengal, 1 in Kerala and 1 in Tamil Nadu. Company offers more than 100 grades, including more than 65 grades of specialty chemical, has more than 120 customers across more than 50 countries. In order to capitalize on the growth in demand, PCBL is also expanding its capacity. In FY23, company had a total capacity of 660 kiloton, and in FY24, their total capacity is at 790 kiloton. This includes a greenfield carbon black project in Chennai based on industry standard 4.0, which provides your cutting-edge technology like AI, ML, and data analytics. This plant operated on around 55% capacity in FY24, and management expect this plant to reach its full capacity by Q3 or Q4 of FY25, that is this year. So a good portion of growth would come from here. Moreover, increase in capacity utilization would improve the margin due to operating leverage. This operating leverage is a very important concept that I've explained in my exclusive weekly video series, where I discuss important concepts around fundamental analysis along with my own conviction ideas where I invest my money. I also track more than 200 companies and update them in an Excel tracker. For more detail, you can explore my website or check the join button of this channel. Moving on, last year PCBL has commissioned one specialty black line of 20 kiloton in Mundra, Gujarat, and another specialty line of 20 kiloton is under implementation at this point in time and will be commissioned during this current year. These strategic initiatives are expected to increase its total manufacturing capacity to 790 kiloton. Moreover, they have recently acquired 28-acre land in Mundra for further expansion in the future. Then there's another brownfield capacity expansion of 90 kiloton ongoing in Tamil Nadu. That would take the total capacity to 880 kiloton. Company is also evaluating a new greenfield expansion to take their capacity beyond 1 million ton in the near future. So massive expansion plans that would further fuel the growth in top line. On top of this, PCBL has made a big acquisition of a company called Aquafarm in FY24. This acquisition was worth 3,800 crore, and during that time, PCBL market cap was itself around 7,500 crore. So it was a big acquisition. Established in 1974, Aquafarm is India's largest phosphonate producer and among the top global players. Company operates in specialty segment of water treatment chemical and oil and gas chemicals. In FY24, Aquafarm operated on around 55% capacity utilization, and PCBL management expect the capacity to reach between 80 to 90% in FY25. So that would again boost the top line, and this acquisition is again in line with companies focus on high margin specialty chemical business. So overall, the reason for management bullishness for high growth in coming year is due to high demand in the industry and management focus on capitalizing the opportunity by increasing capacity, improving the capacity utilization and new acquisition. On top of that, PCBL management is now focusing more on high margin specialty chemical business. Apart from all these things, PCBL is also focusing on a very interesting category of electric vehicle segment. PCBL has entered into a partnership with Australian company to develop nanosilicon activities to be used in anode of a lithium-ion battery. This segment has a very high margin. As per management, this joint venture will help us to foray into high-growth battery material segment with innovative technology, giving a huge impetus to the origin of the developing conductive carbon black grid like Energia, to a multi-specialty material portfolio for enhanced battery capacity, enabling higher mileage to electric vehicle, faster charging, safer battery chemical and reduced carbon footprint and cost per unit energy stored. If this recent foray into EV segment work out as per the management expectation, it can take PCBL to high growth trajectory. I hope you got a fair idea of PCBL business model and future prospect. Now one key question is, how do you trust the management? Because 5 times growth in 5 years is no joke. What if management is bluffing? So if you look at PCBL management background, it is part of RP Sanjeev Goenka Group that has turnover of $4.5 billion and owns multiple listed companies like CESC Limited, First Source, Saregama and many other companies like Spencer, Nature Basket, 2Yum and so on. Its chairman is Mr. Sanjeev Goenka, who heads the entire group. Then Mr. Kaushik Roy is the MD of PCBL. He has done his engineering and masters from IIT Kharagpur and has more than 3 decades of experience. He has been heading the company since 12 years now. So overall, PCBL has a very strong promoter pedigree and top leadership team that builds a strong trust. Now it's very important to look at the key risk in the growth thesis. So first key risk is cyclical nature of tire industry. Since a major chunk of PCBL business still comes from tire industry, companies' growth depend upon demand from tire industry. Although there is a good demand for the sector in the long run, this demand is slightly cyclical in the short term. On top of that, uncertainty from global market can also impact the demand for carbon black for PCBL. Second risk is raw material risk. A good 70% of companies' expenses are from raw material, which is crude oil. So crude oil plays a key role in margin. Although the company has the ability to pass on the increase in crude oil price, but any significant change in crude oil price can have a negative impact on company's margin. Third risk is Chinese competition. Although China is facing issue of increase in raw material cost for carbon black, competition from China would always pose a risk to PCBL growth expectation. Then fourth risk is failure of new business. The recent acquisition of Aquafarm are yet to show the result, plus PCBL focus on new EV battery segment is also not yet proven. So there will always be risk of failure in new business integration. Then fifth risk is high debt. If you look at Screener, it shows a debt to equity of 1.5 times. Now in the balance sheet, it is showing a significant increase in borrowing from 1000 crore to nearly 5000 crore, and that has resulted in high interest component for the company. While the company has cash equivalent of 385 crore and is consistently generating high cash from operations, but there is always a risk of challenge in business that can impact company's profitability, and elevated interest can be a risk for the company. Having said this, company intend to reduce this debt part as they grow in the future. So in this video, we looked at PCBL business model, growth opportunity for the company, and its plan to capitalize on the growth opportunity by expanding the capacity, improving utilization, entering into new high growth segment like electric vehicle, and growth via acquisition. Overall, PCBL intend to move from a more commoditized tire business to a specialized chemical business, and that is the key reason management expect to grow both top line and bottom line. At this point in time, PCBL is trading at a market cap of around 12,000 crore with a PE ratio of around 25. So currently the market is paying a valuation which is reasonable for the company that is more of a commoditized business. But if PCBL can shift towards specialty chemical business, it can see valuation re-rating. So growth in top line and bottom line along with valuation re-rating can result in good wealth creation opportunity for the shareholders. Having said this, you need to keep the key risk in mind before making an investment decision. There are many variables that can negatively impact company's performance. Overall, a very interesting business, part of very prestigious group, and eyeing on huge growth in the future. Valuations also look reasonable. Now it would be interesting to keep a close eye on the business to see if they can meet their growth expectation in the next few years or not. So that's it for this video. Let me know what you think about PCBL, and if you find it useful, do share it within your circle. I would see you next video. Till then, take care.